Hey guys, what's up? How you doing? Yeah, good afternoon, good morning, good night. Based on your time zone, just choose whatever you prefer. Yeah. Okay, so today we're gonna be discussing a very important, very important topic. This is your after understanding your market structure. One thing that is very needful for you to understand is reference points. Because even with the understanding of market structure, if you don't have an understanding of reference points, you won't know when to come into the market and when to get out. Hence, that is why I've tried to arrange this series in accordance, so that you can grab them easily. Reference points. So, I want to check what are those reference points, what are those places that that determines that has great impact in the forex market. No, we are learning pure price action here. Pure price action. We are not doing any other thing than price action. No indicators, nothing. So quickly, I don't want this video to be too long. I might even shorten it, but just pay attention. Pay attention. Okay, so we have several reference points. This can be used either both when the market is trending, uptrend, downtrend, whatever. And the best way to trade is to follow the trend. That is, follow what the IOF is saying. IOF means, let me type it here. IOF means institutional order flow. Institutional order flow. So just in case you hear it somewhere. So I want to talk about IOF. I just talking about the direction of the market from a higher time frame, from an higher time frame standpoint. And I've said that, so let me just say this in passing. Just as you've seen outlined here, these are the major um, ways for us to check the trend of the market, from the 3 months to the monthly to the weekly to the daily. These 4 time frames, never stay away from them. At least every week, ensure you check your weekly time frame. Know what is happening on the weekly. Know what is happening on the weekly. So checking it from the weekly or the monthly helps you to have a bigger picture of what the market is doing. When you open your chart and you make analysis probably during the weekend before the opening of the new week, is that it gives you a broader understanding of what the market is doing. So once you have an understanding of what the market is doing on the weekly, then interpret what you are seeing on weekly, interpret it down to the daily. Daily will give you a clearer understanding of it. I will give an example now. I will give a very brief example of market structure from weekly to daily. You get? So whatever you see on your daily, then begin to interpret it down. It's as simple as that. So I said I will give an example, right? Let me quickly give you something here. So let's quickly run through market structure. So these are weekly time frame. What do we see? We see that liquidity was taken here. As I'm saying it though, you will get used to it. Yeah? You get it. Yeah, you get used to it. So this is liquidity here. Meaning that market went up, came down just like this. It swept this low. Came down, move, and you see this. So this guy right here is a big market structure because this was a high that we would have expected to hold. Remember market structure, down, up, down, up, down, up. So it's supposed to come down, but instead we have what? A swing, a failure swing low. At this moment, when market went up, it failed to take this low. Instead, market did something like this. It broke this high, week by week. This is a week, this is a week. So you can say that this is a what? A brick market structure. Remember your BMS. When you keep checking the market every time, you keep doing your back testing, you would tend to see this thing easy. So you see a BMS here, market came down to a reference point and moved up. Now this will be extremely clearer on a daily time frame. Just follow me. See how clear this is on your daily time frame. Can you see? On the weekly, this was a week. This was a week. Week, WICK. Oh, come on, I shouldn't be doing all of this. It's irrelevant. So it's broke by a week, right? You saw that on your daily time frame. If you didn't see that, just take the video back like 1 minute or 30 seconds behind. It broke by a week. These are weeks. This is a week. This full body, this is a candle. This is the body. Weak body, weak, weak, tiny body. It's as simple as that. So on the weekly, it wasn't so clear, except for one that's that is conversant with the market. But we see here that our market came down here, took this guy out, liquidity, buy body, right? Remember the market was bearish for quite a long time, came down, move up. Sorry, network. Came down, move up. This is a lower high. This is a lower low. All these points together that they are a lower low. Went up again, lower high. Came down to form another lower low. Now this guy going up, fine, normal. This is a lower low, a lower high. Then this was supposed to break out this place, but rather it came here and bounced up, boom. So it took out this high, causing what a breaking market structure. So see how it is clear on your daily time frame. Can you see how it is clear on a daily time frame? Even from here, took out this high. For me, it can be anticipating, oh, market is about to buy. Can you see that? And I repeated that again here. Can you see how clean it is on a daily time frame? But you can also understand that even with your weekly time frame. Sorry, all of these data they just keep loading and loading and loading and loading and loading and loading. I need to go back. So see what we explained on the daily. See how clear it was on the daily. See it here. I just seen weeks. You might be like, oh, this market is just it's not clear. If you are not getting much clarity on your weekly time frame, you can go to your daily time frame. I told you one of these candles took 5 days to form. So it takes time. It takes time. But on your daily, you can easily interpret what the market is doing. Okay, so that's about that. Let us move. So today I want to talk about something very important. Reference points. Reference points. Okay. I want to talk about reference points. This is very, 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 very important. So let's talk about reference points here. So we have here I'll be discussing. I know I have several reference points. I will be discussing major ones that I want you to pay attention to. Major reference points. Major reference points. And I want you to pay extreme attention to. Pay attention to this. You will get it once and for all. Now, I won't be teaching us too many things so as to avoid complexity. Now, we have three major reference points. Number one, order block, or you can call it blocks. I love to call them blocks. We have order blocks, fair value gap. Remember I talked about retracement, right, into a fair valuation or price valuation. You see that here now. Fair value gaps, highs and lows. Where is my hand? Now inside this high, we also have relatively equal high, relatively equal lows. I will show you that. Let me include it. Relative equal highs or lows. So these four things I want you to pay keen attention to. These four things. These four reference points. Your order blocks, fair value gaps, high and lows, relative equal highs or relative equal lows. Pay attention to these guys and you will never regret taking this course. Pay attention to this. It works like fire. Pay attention to this. Huh? Okay, so I will start from my monthly because that's how we tend to determine what the market is doing. Check from the monthly, then we go to the weekly, so on and so forth like that. Permit me to bring this here. So institutional order flow, remember, that is you knowing the direction of the market from an higher time frame perspective. So I said we have order blocks, we have fair value gap, we have relative equal highs and lows. So quickly, I would want to touch relative equal highs. Then subsequently, I will talk about fair value gap. Then lastly, I will talk about order block. Are we ready? Yes. Now you see this. This is a low. See these two low. They are close to each other, right? These two guys, they are close to each other. These didn't take this out. If this guy had taken this low out, we would have called it a strong resistance. Resistance is a point, so a strong support. Support is a point whereby the market gets to and rejects. Talking too many things right now. Sorry. So we have two lines here. The market was coming from here, bounce here, bounce here. This level, this is a resistance level. This is support level. And this is a place whereby the market gets to and rebounds. You can decide to take it out a little bit. Remember I told you, wherever you see places like this, highs like this, there are liquidity line there. So you can break. so on and so forth. Get it? Okay. So that is resistance. Resistance is at top, while this thing is below. Support is below. Resistance is at the top. Any level at the top, the market gets to and rejects downwards. That's your resistance. Any level below, the market gets to and rejects upwards. That is your what? Your support. Now our highs and lows, they can serve as what? Resistance and support levels. In fact, your highs and lows are the surest resistance and support levels. So this is a high. This is this is a low. This is an high. Now you see this point, these lows, they are relatively equal. That is, they are almost equal. So that is your what? That is your relative equal low. They are reference points. They draw markets. These places, banks, institutions that are interested to come down there to kiss people's to take people out. Yes, there's liquidity below those places. Why? Because money have been pumped in relatively equal low. Or I can just make this. So relative, that R means relative. Equal low. Sorry, this is so tiny. I'm so sorry for that. So you see how the markets came here before, went up, then came here again. This will serve as what? A liquidity point. Market will come to what? To take it out. So once market came to take this point out, and let's say it gives us a break in market structure here, you can say we are ready to what? To buy. Where are we buying to? Another reference point. This is another reference point. This is what? Another equal low, equal highs. This is another equal highs. This is another equal highs. These are another equal highs. You get it? You get that? Yes, these are another equal highs. So most times market makers like to hunt all of these places, knowing so well that what? That there's money inside it. There's money here. There's money here. So like highs like this, you can also call highs like this buy side liquidity. Buy side liquidity. Buy side liquidity. It is also known as your what? Your eyes. Just get familiar to these terms. As time goes on, you will understand it. This place, this eye. Let me take this. This eye, there's liquidity above here. We call it buy side liquidity. It is an eye. You can either you can tag it as a eye. You can tag it also as a buy side liquidity. Why is it a reference? Because there's liquidity above here. You see this point? This is an eye. There's liquidity lying above this place. So when market came down to a reference point, it went up to take out what? This eye. So I want you to go through your chart and just mark those points. These are under low. This is another low. Can tag this one as what? If this is buy side liquidity, what will this be? Yeah, you guess right. I like that. If that is buy side liquidity, this one that is below, what will it be to be? Sell side liquidity, also known as what? A low. If they were two and they were relatively equal, you can call it what? A relative equal lows. Do we get this? Do we get this? Yes. Awesome. 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 So this is it about. So this is one reference point, our highs and our lows. This is a single low. It's just one. And what do I call this place? What do I call places like this? Yes, you guess right. You guess right. This is a what? A relative what? Equal high. Please, you must know this. Relative equal what? Equal high. So we can say that. Now, looking at this now, you can see this guy is buying from October, November, December. So we can anticipate that by January, February, this high we want to be taken out. And look at what happened here. This is a what? Relative equal low. Remember I told you that. Now this is in a monthly time frame. These are liquidity. These are liquidity. Market came down to take it out. See, took it out. Can you see this point? Can you see? Market actually took it out. You see? So that is it. So this is our what? So we're expecting this market to what? To get here. We're expecting price to get to this high. Why? Because this place is a what? A buy side liquidity. Please don't forget. Don't forget this. Don't forget this. This is a what? A buy side liquidity. Let me tag this. Can you see how I'm picking it? Just pick it. Press your right click. Settings. Text. I can label it. It helps you whenever you come back to check the market. Buy side liquidity. So I love to give a short nickname, BSL. Buy side liquidity, or you can call it a I, whatever you want. But it is a buy side liquidity. This lettering is too far, so I would love to make it. I would love it to be here, by the left side, not center. This is center, at the left side. This top means at the top. If you no, I've watched the video on how to use TradingView. Sorry. So this is one reference point you don't want to forget, because these are the reference points that pulls the market to itself. It pulls the market to itself. So you don't want to forget these places. You just don't want to forget it. Let me show you, and that is why you don't want to forget all of this. You will see something that is shocking now. Please don't scream. That was a joke. Do you see what I'm saying? Do you see what I'm saying? Okay, let me take this out. I think I've explained what this is. Okay, so let's pick this tool. This is an horizontal line. Remember, this is a monthly time frame, so on a weekly it will be glaring low. This is a low. Market came here, went up. This is a high, came down here. What do we see? You see that market don't just turn at any point. Market is not just seeking any point anyhow. It's not just walking about. No. It has a focus. It knows what it's doing. They're intentional. The market makers, they are very, very intentional. Look at this. This is a swing low. Look at this. Market came and take it out by week. This week is signifying that it just came to peak liquidity. It just came to what? Peak liquidity. I would have gone lower to show you what happened there, but in our next video when we are doing our proper top-down analysis, I will show you all of those things. So market came downwards to peak liquidity, and see what it's doing. It's going up. See, impulse. This is a what? An expansion, right? An expansion can also be called impulse, impulsive move. When you see something is impulsive, quick, fast. So this is a quick expansion. Now, what's this guy doing here? What can we call this? Consolidation. Yes, you are correct. Consolidation. Remember our first topic. Market expands, consolidates, reverses, retraces. Can you see? Expansion. The move is swift, one-sided. One-sided. Only sellers. Imagine selling from here down to this point. That's huge. That's a crazy profit, man. So it's what market did there. Same thing happened there. So guys, whenever I see this, the knowledge of this is that it will help us know how to prepare ourselves that okay, market is not just going anywhere, it's going somewhere to do something. Sorry, let me make this straight. If you want your line to be straight, you can just press your shift. Can you see? Can you see it's moved up? Let's say you are trying to drag it, you are dragging, just press shift to go to the, it will be extremely straight. See, that is a what? This is a old low. This is a old low. Alright? This is a old low, former low. So market did, took it out, it began to go up into a reference point, came down. Do you understand that? Yes, same thing it did there. It just came out, take out these relatively equal lows, went up. So that is one. Again, let me show you another reference point that we really need to pay attention to. Let me see if I'm still recording.